All right, good afternoon. So I need to cover what's been going on in the news today around the inflation number because we've seen inflation go from 2% to 2.2%. So what I really want to do is try and get you to decide whether this is something that is good news, bad news, or whether you should just simply ignore it. There are quite a few data points to actually talk about in this as well, because inflation has gone up for a reason, and mainly it's literally just grocery costs really that has driven it up slightly more. But with that being said, it was expected that inflation would increase at some point at the back end of this year. If you've been following the channel, we've been tracking 2.4%. And this is where it's kind of good news and bad news, because whilst it has gone from 2% to 2.2, it's actually coming lower than what the forecast from economists has been. So lower than expected at 2.3. So good news, it's not as much as they previously thought it was going to be, but bad news, it has gone up altogether. Now, just yesterday, if you've been paying attention to mortgage rates in the UK were there was a bit of a price war going on. So providers like NatWest right now have got a 3.89% mortgage rate available on the high street, which is something we haven't seen for a very, very long time. And the reason why this has happened is because obviously the mortgage lenders need to lend money. And with the Bank of England base rate recently coming down to 5% from 5.25%, this has been a bit of a catalyst. And we've seen the property market indeed react as a byproduct of that Bank of England decision. But speaking of the Bank of England decision, this is where the next question, or one of the first questions that people will ask, comes in. If inflation has gone from 2% to 2.2%, does that mean we're going to see a reversal to bring the Bank of England base rate down to 5%? And I think it's an interesting thought, because if you remember, I was on Sky News actually a couple of weeks ago, and one of the things that I try to point out was the fact that there are 9 people on the Monetary Policy Committee, and the decision in favour of a bank rate cut, was 5-4. So it was really, really, really thin. And when they meet next, one thing that they're going to be looking at is, well, what has inflation done? They're going to be looking at wage growth. They'll be looking at a ton of things. But the fact that inflation has gone from 2.22% to 2.2% is going to be a key consideration for them. Now, do I think that that means that they're going to increase the bank rate? Personally, no. And so if you are in the market where you're looking at mortgage rates right now because you want to buy your first home, or you're either looking to remortgage, and there's 800,000 people 560,000 people to be exact, who will be looking to remortgage later on this year, I don't think that this is going to present a problem for you. I think that ultimately the decision to increase the bank rate won't happen until we get to the point where we see consistent increases in inflation, taking it from 2.2, where it is right now, to something like 2.8, maybe 3. At that point, I think they'll start to really seriously consider whether or not they increase the bank rate. But for now, I think we'll be completely fine. There's some other things within this inflation data which is actually really important as well. Core inflation actually fell from 3.5 to 3.3. That's going to be very encouraging for the Bank of England and the Monetary Policy Committee. And one of the reasons why I think that we'll still probably see another rate cut next month when they meet. I mean, if you're looking at the odds at the moment, so this is from economists looking at the state of play, they are putting a 45% chance of a rate cut next month, despite this data coming out today. So I think regardless of what happens, we'll probably see another bank rate cut next week, which will be good news for mortgage holders. It won't necessarily be good for savers, because obviously savings rates will come down on the high street. But for interest rates, cost of borrowing is going to be a positive bit of news. So in the end, is this good? Is this bad? Should you ignore it? I think it's good in the fact that, well, it came in less than what was forecast. It's bad news overall, because really we want to keep inflation at that target of 2%, and it's not currently. Is this something you should worry yourself about? Is this something that you should lose sleep over? No. I personally think that you ignore it for now, because we're not going to know if there are going to be any lasting consequences probably for another month or so. So ignore it. Don't take any notice. Carry on doing what you're doing. Hope you enjoyed this video. If you did, make sure you smash the like button. And if you haven't already subscribed, subscribe as well. Catch you later.